This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Here are your TF Metals Report podcast highlights for the week of January 25th, 2021. Again, a daily podcast is just one of the many benefits subscribers to TF Metals Report receive. And to give you a taste of that, here are just a few of the things that we've been talking about all week at TF Metals Report. Back on Monday the 25th, we started the week with a close look at the chart of COMEX digital gold and what it might be telling us about the days ahead. Okay, like I said, I would have expected more for gold today. No doubt, option expiration shenanigans from the banks restraining it. Again, we've been warning you to expect hysterical notes and tweets from the perma bears. They're going to come tomorrow because tomorrow will be the day that the 50-day, which you see today is 1862.80, is going to cross down bearishly through the 200-day, which is at 1862. Tomorrow, the 50-day is going to be, like 1861. So you're going to hear all these people say, oh, look at that, it's bearish cross, blah, 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 blah. Okay? And that might be enough to spark a little technical selling, right? So could we get a dip? Yeah, why wouldn't we? Especially it's option expiration day. The banks want a dip. They certainly don't want a rally. So don't be surprised if we get a little something tomorrow that maybe takes us back down to 1840. If something happens, they want to try to flush everybody out ahead of the Fed. Don't be surprised for another tail hanging down here like we saw last week. A couple of those, down here getting between 1830 and 1820. But there's plenty of time, whether that happens or not, to run out this week pressing up against that purple bull flag line. If we don't have too much of a setback in the next 48 hours, and if I'm right about rallying after the Fed, we get through that flag line, we're going to start by the end of the week looking at 1880 and looking at that 100-day moving average. And then obviously the next key level is 1900 again. Why wouldn't you think? Again, given that history that I told you earlier in this podcast, as you can see on this chart, dumping in late September ahead of the October option expiration, in October going off the board, dumping in late November ahead of the December expirations and the December contract going off the board. Why would you be surprised by a dump here tomorrow, Wednesday, maybe all the way up into the Fed or right after the Fed, that dumps again? Not so much. I don't think we're going to dump all the way to 1760, but something that at least hangs down again, closer to 1825-ish. But then again, look, October, little bit came off the option expiration lows in late September and rallied into the first part. Heck, that rally's $80. December, gosh, we came screaming right back from 1780 to 1880 in about 5 or 6 days. So we'll see. Again, I like the open interest action yesterday. I like what I think is going to be said later this week. I like the rally in the bond market. I think there's room here to rally again in the next week to 10 days. On Tuesday, January 26th, we began to notice the unusual short squeeze action taking place in stocks like GameStop. We started to wonder if that Reddit crowd would turn their attention to the most manipulated market in the planet, silver, and some of the heavily shorted silver miners. But for now, we just focused on GameStop and what was beginning to take place there. GameStop going on Friday after this news broke went from 20-something, maybe 30, up to 75 and then back to 65. And already this thing, which had begun the week last week, closer to, 25. And as you can see on the chart here, all through last fall, all through the holiday season, not even getting above 25, all just constantly between 20 and 25. All of a sudden, with that news hitting, the crowd piling on and forcing a massive short squeeze, that thing goes from, like I said, 40 to 75 and finished about 65 on Friday. Then surges again yesterday, pulls back, actually finishes up on the day, but a red candle because it's lower than where it opened. And now today, just going crazy, finishing the New York Stock Exchange session 150 And then this afternoon, within the last hour, Elon Musk, in a one-word tweet, as far if I remember right, just simply said, game stonk. Like, everybody makes fun of the stonk market. Just buy stonks and you'll do fine. He just tweeted game stonk. And so where you see on this chart, it was 150 at the New York Stock Exchange close. After hours, in the 1 hour since, it has traded as high as 230. So now in the last, not even 2 weeks, the stock has gone up tenfold from 23 to 230 on no rationale, no fundamentals, no buyout, no nothing. They didn't just cure cancer. No, just a short squeeze. The lesson here for us, I know there was some talk last week about maybe First Majestic going down this road because of the massive short position. Think of all the junior miners that are the same way. Again, you've heard me talk countless occasions about the rule and getting some institutional money to flow into our sector. This is the powder keg, not necessarily 23 to 230 in 10 days, but this is the powder keg that we sit on in many junior miners that have been shorted into oblivion. Remember, every bit of good news, you get immediately crushed because of the naked shorting. It's like Eric Sprott and his Save Canadian Mining initiative that he's so full behind, trying to ban naked short selling. Well, they're keeping it on. No one's banned it yet. We get any kind of surge, we get an explosion in price that sets it off. Again, I don't think you'll see 23 to 230 or even 2.3 cents, $2.3 to 23 or 23 cents to $2.30 or whatever like that. Well, maybe you see something like that, but who knows? But what I point out to you is the absurdity of what is now your stock market when you get things like this to happen. It's a crazy world we live in. On Wednesday, the 27th, our focus returned to COMEX Gold. In a slightly disturbing pattern on the chart, price has rallied from $1,200 in November of 2018, the whole time being above its 50-day moving average, which in turn was above the 200-day moving average. But this recent consolidation has dropped the 50-day back to very near the 200-day, and it may even cross it in the days ahead. So we'll keep an eye on that and keep everyone posted at TF Metals Report. Here's my one thing that gives me pause. I don't want to say it's, of great concern, but it's something we have to be mindful of. This first chart, kind of hard to see the candles because they're daily candles, so they're all jammed into this one little itty bitty chart. But this goes back to when we really took off from 1,200 back in late 2018. And notice that the red line, this is the continuous front month contract, the continuous, well, not contract, but continuous front month chart with the continuous front month 50-day and 200-day moving average eye, okay? So it's a little different from just the Feb gold alone, okay? But anyway, point is, coming up, this rally that began that we picked up in late 2018, took off in early 19, the 50-day crossed up bullishly through the 200-day in January 2 frickin' years ago and has remained there ever since. And you can see how the red line, the green line, both going up. And now we've consolidated so far and for so long now, for 5 months, that even on this continuous, nearest chart, the 50-day is just, 14 days away from crossing back down through. So, I'm not bearish. And as we've talked about, we may go sideways into June. Who knows? Before soaring into the end of the year and still posting a 20% gain. I'm not sure how it's all going to play out. But this is something to be mindful of. Because, again, this is just showing you the effect of how we've just been kind of stringing this along for the last 5 months. On Thursday, the retail traders from the Reddit message boards have indeed turned their focus to silver and some of the silver miners. That was a big topic of discussion during our daily podcast. Silver, though, however, continues to look better. We've been talking about this for weeks because silver being treated more like a commodity, obviously. And then obviously, I don't want to underestimate what happened today. Like I said, wherever it came from, it's still now going to take work to be maneuvered back down by the banks. Maybe they'll have some carpet bombing things when nobody's paying attention, like at 6 o'clock tonight or something. Who knows? But what is real is this chart that you're looking at. this daily chart. You know how important it is to get above 26 on a daily closing basis. Last time, when it happened in the middle of December, they immediately smashed it the next day, and maybe that's what they'll try to do tomorrow. But then once we got above 26 again later in December, in 5 or 6 days, we were near 28. So let's be optimistic. Let's hope this momentum continues tomorrow. Any daily close and weekly close above 27 would be fantastic. It would very likely set us up for a test of those early January highs next week. So keep your fingers crossed. And on Friday, January 29th, the Reddit-driven retail surge in silver is still going on. And at this point, it looks like we are set up for a very interesting week next if we can maintain this buying interest. Price earlier today got very near to $28, and we know how important that level is. But keeping our sights realistic today, we are simply hoping for a Friday weekly close above $27.30 in the front month March silver contract. As I speak, price has been driven back below there as the banks are clearly trying to enforce their will and keep price restrained. But we'll take it one step at a time. A weekly close above 27.30 would be beneficial, and if we can get above 28.04 for a weekly close next week, we may be on to something. The best thing you can do to monitor this situation is to become a subscriber at TF Metals Report. It's only 50 cents a day, or about $15 a month, and you can, of course, cancel anytime. So please check us out at tfmetalsreport.com. And in the meantime, I hope you enjoy these weekly podcast summaries. If you like this channel, please give it a like and maybe subscribe, and hopefully we'll get more people to understand the important necessity of physical precious metal ownership. Thanks again for listening to the TF Metals Report podcast highlights. We'll talk to you again next week.